All right, everyone. We are back. We're back live with another watch market update. Of course, the famous Professor is a recurring character on this channel. He does grace our live streams once every so often, but more and more frequently, I want to set aside at least an hour of time where I can actually pick his brains about something very specific. And this is what we are going to do today, a 1 hour long conversation where we will be mostly pouring through the Swiss Watcher, which is an annual report produced by Morgan Stanley. Now, I believe it is in its sixth year in a row, in collaboration with a company called Lux Consult. I think it's a great and a very informative report every year. I appreciate the fact that they approach it from the industry perspective, from the financial perspective, and also from the luxury goods perspective, which is what we are going to highlight today. So you might not find the most deeply horological, profoundly nerdy conversations that we have on a regular basis here. This will be nerdy in a different way, and I look forward to learning from the professor. Professor, how are you?
Very good. No, thank you, Lord. I'm sorry I haven't been on your stream, on your live shows for some time. And that's because I've been traveling quite a bit over the last, 3, 4 weeks, and um, it hasn't been easy. But I visited a couple of times Switzerland, not during the one watches and whatever dreams, I think I'll call it. Because it's dreams. You go and you dream of the watch. You're not gonna get the watch. Um, but I went there a couple of times, and then we had the Easter break. So I took the
Happy
family to
happy
relax. Thank
belated
you.
Easter, by the way. I'm guessing that was just last weekend for you, I'm guessing.
Yes, for the Orthodox, the rest of the Christian world had it a couple of weeks before that. I'm not quite sure why they make these distinctions nowadays, but anyway, you know,
Right.
it is what it is.
Look, Professor, you know how much I love theological debate, but too bad we
Oh
won't be
yeah,
having that
we're
today.
gonna bore everybody.
But again, the as long as you're back, as long as we are united, coordinating in our outfits like this, in neutral colors, it's beautiful, profoundly becoming of the channel called Watches and Style. So let's get right into it. I'll just share the report on the screen just so we have a common point of reference. Would you like to say a few things about the Federation's report before we start the February update from the Fédération de l'Industrie Horlogère Suisse?
Uh, well, the, well, you can say a few things, of course. These reports they need to be looked at on a year-to-year basis, but look at the trend overall. Um, I, the overall impression is that they want to give this notice that the market is doing okay. I think this is my takeaway. And again, we can see it. That yes, things are kind of okay, right? And even if there is a little bit of a uh, correction, still things are looking quite good. So again, February, um, we have sustained growth, as they call it, 12% This is not unexpected given that China has been opening up. Asia is the market that drives a lot of the growth, and you can see this in all the categories. The precious metal has gone up. Um, Gold and steel has gone down, but precious metal has maintained, and then other metals has done quite well. But overall, if you dissect, you see that steel um, is quite volatile, and gold and steel is volatile equally. Um, my take is that these indicators have to be seen with a pinch of salt, because what they don't show is price points,
Mhm.
real increase in value besides the price point. And also, it doesn't account for what is happening to the other chunk of the business, which is the second hand market, which the federation is not able to follow. Um, and here you're highlighting that the U.S. had a stellar month, 15% growth, which is again fine, quite solid. China seems to be recovering, as we said,
Mhm.
8% growth from the COVID. The macro picture in China seems to confirm that the Chinese economy is growing quite well, even if the indications is that nobody really believes the numbers coming out of China on the macroeconomic outlook. And whilst this is happening, there are concerns overall about the American economy, um, stock markets performing okay, the crypto world, which, in many ways, um, has been associated with the watch industry, is completely, I would say, uncorrelated,
Mm.
because crypto has gone up by quite a bit, you know, 3 months
Well,
ago, 4 months ago, and so forth. It has recovered quite well. But anyway, the
I'm
Federation report has shown that things are recovering.
I'm glad you also started by saying that this is kind of a self reassurance at the very beginning. That was your first statement about the report, and at the end of the day, we, of course, you're an economist. You have a probably less cynical take on this, but my layman take on the economy is that it is always based on an almost metaphysical sense of trust, confidence, and credibility. So there's always an aspect of it that is open to what we can again cynically call manipulation, otherwise just call, like you said, reassurance, because any point of data as it is pointed in these two reports, one very short, as you said, and myopic by that, since it just focuses on 1 month, and one in the case of Morgan Stanley that takes in the entire year, um, because at the end of the day, you have two aspects of the market that I want to highlight, which can serve as a segue into the Morgan Stanley report. Last year was a very interesting year for two reasons. One, as you highlighted, it at once confirmed the increasing importance and volatility of the secondary market of watches, how much uh, the value of watches and brand equity is tied up in the valuation of certain models, hyped or unhyped, on the secondary market. So that downturn actually cut down to size a lot of the self-confidence that we are talking about. It also alerted the actors that they need to work to take a bigger slice of the secondary market. And we can talk about how the brands go about doing that with the help of the Morgan Stanley report as well. And last year, we also had an interesting sign, right? On the one hand, we have what the Morgan Stanley report calls the premiumization, right? Where we have increasingly a market which is dominated by ultra luxury, by the four big names, which are independents in a very strict sense, that they are not owned by luxury conglomerates. We are talking about Rolex, we are talking about Patek Philippe, we're talking about Audemars Piguet, and we're talking about Richard Mille, right? More or less 3 in 4 Swiss watches that are sold by volume, by unit, belong to those brands. On the other hand, last year we had like a freak accident, an interesting hype about this teeny tiny sub 500 franc watch called the Moon's watch that's purportedly sold about 1 million units globally. So the data seems a little skewed for that reason, because on the one hand, they note right here, the Federation does too, the devastation of the sub $500 Swiss watch market that is basically already lost to the ages and completely eaten up by the smartwatch. But there's also an increasing disappearance of the entry-level luxury watch, which would be around 3,500 Swiss francs, let's say 3,500 to 4,000 US dollars. So even 1 year, to me, is not macro enough, obviously, and I'm sure you would confirm this as an economist, to direct these trends, because every year we have, both on the macro scale, global scale, and on the minute scale of the horological industry, some events that can mess up the numbers for us. Our local event was the Moon's watch, which sold about 1 million, which is significant, right? That's why Rolex is the big brother, because they sell more than 1 million watches a year. And then we had, of course, the devastation and confusion caused by the war, as well as the market crash last year. So we have interesting events that cloud our vision a little bit. What would you say about that?
Yeah, look, 2022, it was a difficult year for many reasons. One, we didn't know if the world was recovering, and we didn't know what is the appetite for watches. And what we don't know is, coming out of COVID, what will be the response of the watch industry towards the market. We know very well now that the watch industry wants to consolidate. And I think what the report is highlighting is that the top 4 brands, with 1 or 2 exceptions, of course, here they refer to them as independents, but I wouldn't necessarily exclude one other member who is part of this, but because they're not an independent and part of Richemont, that's Vacheron,
Yeah.
is necessarily a loser from this. But the industry is consolidating. I think that is obvious.
And
Another,
consolidating upmarket, just to underline that again, consolidating at the level of the Rolexes, Pateks, APs, Richard Mille's, elite
yes,
haute horlogerie brands, usually plus Rolex, which is its own thing.
exactly. And what is interesting here is both the Federation and the report make the casing point about the value of exports and the value of watches. But what is never clear is the of production of these watches. They do segment the categories, the subcategories into steel, precious metal, and so forth, but they don't say who produces what and how much. And this is where there is a lot of lack of transparency. And they do cover quite a bit the value proposition. So they do say, yes, they export this much, but they need to exclude how much this extra is as a result of total value, which is based on a price versus production. Because last year, 2022, despite the talk about slowdown, recession, and so forth, everybody did huge price increases.
Yeah,
And we discussed them, you discussed them.
and
Uh,
multiple times too, right? Not once, not twice. Some brands did it like about half a dozen times, like Omega.
well, and Rolex found it opportune when the pound was falling to announce another increase for the UK, Australia, New Zealand, and a few other markets
Mm.
on the basis that, oh, we have an FX crisis happening. Well, between the last increase, the pound to the dollar was at 115 when they did the increase. Today, pound to dollar is 1.24. So not only have they gained from that, but on top of it, they gained on the FX. So there is a lot that has happened, especially on the price increase level, that gets unnoticed. The volume of exports in value terms have increased principally not because of production, but because of price increases. And that
Right.
is very important. No report will say that. And I think this is the way the industry will move forward, especially amongst the five big brands, including Vacheron.
I think that's a great point, Professor. And I think this is an interesting occasion for us to perhaps bring um, something that we were discussing behind the scenes, so to speak, as well. But just to touch on that last point you made, where we see an increased revenue because the prices are becoming premiumized, prices are being raised constantly, um, and that this is an increasing trend for the industry. And I will use a slogan that's another kind of independent, um, which again is an interesting conundrum because I'm going to talk about De Bethune, which is owned by Watchbox Global, actually, by a majority stake at this point, but is recognized as an independent because of the autonomy of its horological vision. But their new slogan is, for example, not doing more, but instead doing better, right? So there is an increasing sloganization of this particular kind of luxury product that is singular, that is artisanal, that represents whatever is marketed as the best of the the Swiss horological tradition at a certain point in time. I think if we are going to think about some aspects of the battle some aspect of the battle, one small war that Rolex may have lost, they had defined a lot of the large terms in the beginning of the 21st century. Definitional terms like in-house movements, vertical integration, right? Mass production, luxury at a level where nothing exceeds like excess. Now, it seems a lot of the signal words, which confuses the average enthusiast on online, is really defined by either true independent brands that focus on artisanal production, which by numbers is absolutely dwarfed by these giants that we are talking about in this report as independents, which simply means that these are brands not owned by luxury conglomerates. Again, it's Rolex, Patek, Richard Mille, and Audemars Piguet, not Philippe Dufour, Kari Voutilainen, and François Paul Jean.
And
But more
even for that
importantly,
matter, Lange, which we
right.
do
But
like
Lange, I
as a
think,
brand.
I think they don't include simply because it's not Swiss. I think that's the reason that they are not included in this kind of report. But again, the thing is, a lot of the keywords of the conversation these days are no longer decreed by Rolex. They are in a way generated by smaller artisanal brands. And it seems a lot of the bigger, prestigious brands that have that sort of heritage in their past, if not necessarily in their present and future, are feeding off of that. And we can include certainly Patek in that, Audemars Piguet in that, Richard Mille in that, Vacheron Constantin in that. It's an interesting turn of events. And again, I want to concede on one level that is an important change in the rhetoric. That is a game changer, so to speak, in terms of horological conversation that we are having. When artisanal independent brands that produce less than 1,000 watches, sometimes even less than 100 watches per year, have a bigger and stronger voice in this larger conversation. But we should not overstate their effect on the financial state of the market, and we should not necessarily overestimate their broader transformative power in terms of the horological sector, which is at the end a part of the luxury goods sector right now and is practically taken over. You can slice it in a different way as well. You can say Rolex, Patek, Richemont, and Swatch Group. That can be your big four, or it can be the independently led Rolex, AP, Patek, Richard Mille, and they basically have a share of the market which is right about half, almost, right? Every 2 watches that are sold, one belongs to this big four. And Rolex, especially combined with Tudor, with some slight exaggeration, you can say 1 in every 3 Swiss watch that is sold carries the brand Rolex or Tudor. So we have to focus on the numbers game, at least in these kinds of spaces and dedicated times, where we don't get carried away by the recent excitement about high horological, artisanal, independent brands that make less than 1,000, sometimes less than 100 watches, and therefore barely make a dent on the financial picture of the industry.
Yes, exactly, Lord. I find it quite interesting when I listen, and of course, the streams uh, um, attracts people who are interested in watches, people who are learning, but also people who are opinionated. What is surprising is that I find some people to be very emotional, as if they know because they own, they understand, and they have an opinion. Now, you might say opinions are welcomed and everybody can have an opinion. I am of the view that it needs to be informed, and
Sure.
watches is not a world that allows for a lot of information. Unfortunately, it's not like trading stocks. They just don't know. Um,
I think,
it,
Professor,
you see what I mean?
before you get into the informative detail, I think that's a very, very important distinction. I think we have room for both, but
Mm,
because this channel is a platform that clearly has a good balance of information and knowledge on the one hand, but also a lot of emotion, character, and personality. And I'm not trying to talk about myself in any way as the host
no,
of
no,
this,
I'm not referring to you. No,
but in the
no.
sense, like, the broader community, I actually encourage
Mm,
people to talk about how they emotionally relate to their watches, but it sometimes can we can, and I mean this almost literally, we can sometimes get lost in the sauce, because it's like me asking, Professor, what's your favorite drink? And when you try to describe that, you will have so many different emotions and memories tangled up in it. You can't objectively argue that this or that vintage of wine is objectively better than this or that scotch, which is objectively better than that particular kind of vodka, so on and so forth,
yeah,
because
yeah,
we have certain memories with these drinks, we have certain emotions, we have our taste buds are engaged at this very subjective level, and watches are not extremely different than that. That doesn't mean, we are emotional about our watches, but that doesn't mean we can't also talk about them in a rational, uh, objective manner. I think we can strike a balance, and this is exactly what we are trying to do on this channel, between subjective and objective. Of course, emotions are welcome, but they don't entitle you to an authoritative opinion. They do entitle
yeah.
you to your personal opinion, for sure, and to your taste, but sometimes numbers simply don't lie.
Right. I mean, the Swiss watch industry, if you look at the numbers, produces in terms of exports in any given year between 3 to 25 billion dollars, of revenue. And as you highlighted, it's the small. It is easy, having been in the industry for 25 years. It is very easy, Lord, to produce a watch with probably 20 pieces, an annual production of 20 pieces, 50 pieces, 100 pieces, and you can put a name to it and charge 500,000 for it. That is not very difficult. I'm not saying it's easy, but it's not very difficult, especially over the last, not this year, and probably not last year, but many years before that, from 21, if you go back to all the way to 2012, it wasn't difficult to do that. It is far more difficult to produce more watches, maintain the quality, do the marketing, um, and compete in a market that is becoming more concentrated, but more. um, um, solidifying, and that is difficult. What I don't like is that people can easily dismiss brands. They often refer to watch brands that have limited numbers as better brands versus those that are producing many more. So I've seen people who claim, oh, yes, Lange is a far better watch because they only produce 5,000 pieces versus Vacheron or Patek, which produces now 70 plus thousand. And
But
what
by
is
the way,
Patek?
that's the funny thing about that is, usually when people cook numbers, they exaggerate them, right? So nowadays, you have some of these brands, and I'm not going to name names, that leak out numbers that are, I believe, and I have good reason to believe, are significantly less than the number of watches that they actually produce, because people have these sorts of rote memorizations about what really means quality in horology, right? Which means, like you said, sometimes the memorization is, oh, if they make a smaller number of watches, that means automatically that they have better quality. Check. So some brands
Yes,
actually leak out numbers that are much less than their actual production, because it makes them seem more high horological just by that. The one thing I want to show in this pie, which will help us also illuminate one of the points you made immediately, right? We talk about the increasing and increasingly consistent success of Cartier, for example, in the way they made the runners-up spot their own. Um, and I love that in a recent interview with Hodinkee, their CEO, uh, has been consistently pushing away the advances from Ben Clymer, because who was trying to pump him up a little bit, saying like, well, what will you do to get even bigger and perhaps like, one day, and he immediately stops Ben Clymer and says, no, 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 there's no way we can compete with Rolex. We do something else. But going back again, this is one point you illustrate, right? The brands are increasingly focusing on what distinguishes them at their level, rather than trying to play the game, which is very hard to sustain at the volume and consistency that Rolex does. But going back here, you see, for example, that Cartier has superseded Omega, right? And it has been in the runners up spot for the last 3 years. But actually, they have, in terms of sheer units, 7% of the market, whereas Omega has 7.7%. What does that mean? That means simply that Cartier watches are, on average, more expensive than Omega watches. Uh, Patek operating at such a high level with only over 5% share of the market. Same thing with Audemars Piguet, slightly less than 5%. Richard Mille, only 2.7%. These are ultra luxury pieces, extremely expensive, to the tune of increasingly six figures. So there's an increasing premiumization, not only in terms of the sheer number of units sold, but more importantly, because the brands that dominate the market, the brands that have become the lords of the hill, because there's only one king, have started upmarketing themselves year by year by year by increasing their price points, and they have been so far very successful in doing that.
yes, I think the watch industry has already decided, doesn't need to decide, that the way forward is going to be based on price increases and less on production. I think over the next 10 to 15 years, people will not be able to buy multiple watches. It will become even more difficult to obtain. That doesn't mean anything about, the secondary market, and it's not an investment proposition and so forth. All I'm saying is that the sheer numbers are not there to justify for a huge increase in production. So the only way that the revenues can be kept abreast is to increase prices, and they become more of an unobtainable luxury good, which we have seen in other segments of the luxury market being implemented. Rolex cannot go from 1.2 million to 2.4 million in the next decade. It's just impossible. Patek Philippe cannot go from 70,000 or so to 150,000. There are difficulties in supply, there are difficulties in watchmakers, and there are also difficulties in the culture of
Mhm.
these brands to do this. The exception here is Omega, Cartier, which is an interesting brand because it's not a watch but more of a jewelry fashion statement. And they have been able over the last 10 years to capture the imagination of the market by promoting the jewelry as a watch and the watch as a jewelry.
Yeah.
And that is an interesting segment. Um, just
And also
like
they also benefit, I think, not only from an entire catalog, an archive of great designs, but a lot of those great designs are incredibly, how shall I put it? And I'm sure you won't like this, but kind of neutral, gender neutral in a way, right? You can think of tank as being decided by size and proportion rather than being more feminine or masculine for anyone involved. Same thing with Santos and its iterations, Tank and its iterations. It's about the shape, it's about the design, it's about the voluptuousness, the extravagance, the almost sex appeal of a particular object that is worn on the wrist rather than necessarily the uh, strong masculine or feminine statement of the design necessarily. So they also have a very particular angle on the current market, which is transforming, which has an increasing female interest, which
correct.
has an increasing significance of women collectors, and women have been consistently very loyal consumers of luxury goods, and Cartier has great ways to capitalize on that. They're just implementing it on their watch segment, and they have been reaping fruits of that in the last 7 years since Cyril Vigneron has stepped up to the CEO role.
Absolutely, and for me, the another takeaway, since we covered um, this segment, is that for me the stable the stable producer of watches is a solid brand. Is, besides of course Rolex, which is on its own, is Patek Philippe. Notwithstanding the criticism about the imagination, what we've discussed, you and I, on this
Be nice.
stream.
Be nice.
Yeah, Patek seems to be consistently keeping its position, between fifth, fourth, over many years. Um, Surprisingly, and I think that this is the big surprise, is Richard Mille. Over the years, they have done exceptionally well, and they are very unique, regardless of what we think and the price point and all of the things we have said. Interestingly, and the big also revolution is Tudor, no doubt. Interesting what they have done, and of course, kudos to them. My concern is, of course, the smaller brands, um, Longines and so forth,
And
Tissot,
also
and
smaller in size now, perhaps, like in terms of share, we should say, but
yes,
in a way outsized in terms of their importance to the heritage. And perhaps, again, perhaps this is the two of us being emotional in a certain way, right? Because you hear the name Longines, no matter what you think of the Swatch Group or whatever, it strikes a particular tone. And I was going through, for example, the
yes,
Monaco Legend auction that's coming up this weekend. So many beautiful examples of Longines chronographs from a bygone era, so oversized and so beautifully sporty and dynamic for their era. So when you see Longines falling off in this day and age, it causes a certain pain. Same thing with Tissot. Same thing with Breguet. So
yeah.
I understand exactly what you mean.
In that category, I see with remorse the constant decline of Gégé Lecoutre. Um, you see this descending continuum, which does not deserve this kind of treatment. Panerai, unimaginative, and I think they really need to get a non-watch CEO to revamp the company, because
Mm,
they're losing big time, and I think eventually they'll be out of the top 20 league. Surprise was the stellar growth of Breitling, which is good because Breitling offers interesting pieces, not necessarily for my taste, but I like to see them there in the top, 15. Um, they deserve, but JJ is taking an undeserving position, um, in the second tier of the top 20. And unfortunately, I think they will continue to decline. And the others, I'm not so concerned. Tag is, kind of trying to reignite its sense of existence. Um, I am a little bit concerned about Vacheron, but I'm happy to see them there in the top 10. Uh, I respect them a lot. Um, and it's unfortunate to hear people make critical remarks about them, because obviously they are the uninformed. Vacheron is an
right.
excellent brand, and
I think,
even
again,
Audemars.
it's not
Yeah,
even at this level. Again, I think we have touched upon the aspect of emotion, which we value and respect on an individual level, but which we want to take to task at a critical level, at a more objective level. But I think that is a reflex that's mostly just rote memorization of stupid things that people hear online and that they just repeat to look a certain way. It's I mean, it's an instance of how sometimes just a little knowledge is actually much more pernicious than full on ignorance.
Very, very well said. Very
Pe-
well said.
People just focus on this ideas of, oh, there's the Holy Trinity that was once made up of Patek Philippe, Audemars Piguet, and Vacheron Constantin. Now Vacheron Constantin is part of a luxury conglomerate, so it no longer belongs to that. We should perhaps integrate something. I mean, these are just silly little conversations of people who want to look a certain way, and it shouldn't really concern us, honestly. But I do agree with you about Vacheron's important place. But I want to roll back
Yeah.
the tape slightly to what you said about Breitling before focusing on their particular success, because they have not only broken to the top 10, but proved that they belong there over the last couple of years. Uh, this report highlights that as a trend of how independent brands that can devise their own strategies, and now, in the background you can hear certain things about these smaller brands that we were talking about that are important for the heritage: Longines, Tissot, um, Vacheron, Alain Gonzone in its own way, even though it doesn't belong to the Swiss industry. Breitling, they highlight, along with, for example, Girard Perregaux and Ulysse Nardin, which demerged from Kering and is now in the leadership of their top executives. Um, and these brands, having found that new sense of autonomy and a new experience of freedom in making their own decisions, have charted very important success stories, which can, in fact, in the future, perhaps be teachable moments, teachable experiences for certain heritage brands, which may be ripe for picking from luxury conglomerates, right? Because Breitling, to now talk about them specifically, since they have been um, grabbed by this investment company from the Schneider family, I want to say. I'm not confusing, hopefully. Um,
Yeah.
they have had a very interesting mix of a turn to heritage, which is, of course, led very knowledgeably in terms of a collaboration between Georges Kern and Fred Mandelbaum, who is, of course, one of the foremost experts on vintage Breitling pieces, not limited to vintage Breitling, but certainly there. So they make very faithful reissues um, of their heritage models. But on the other hand, through their social media strategies, they seem to also have found the pulse of the current market in terms of um, also gaining a share with their seasonal, more hype driven releases, whether it's adopting a certain color on the dial, that famous shade of blue, or uh, contorting and conforming the sizes of their cases to what has become now the new normal, around 41, 40 millimeters, so on and so forth. So once a brand has a particular kind of vision, they can implement without having to constantly go back and forth with corporate overlords. There is actually ways of gaining some share proportionate to their size in this market, rather than being on this constantly downward trajectory, like Breguet, like Tissot, like Longines, like Gégé Lecoutre, and like Panerai. So they need, like you said, these brands need a little more breathing room, perhaps, even if they remain in as part of a conglomerate, a little more of an independent strategy so they can recover and rejuvenate themselves.
Yes, and the other thing we don't know is what happens if they disappear. You know, can
Mm.
a watch brand disappear, or it needs to be taken by one of the big ones, LVMH or Richemont, in order for them to be sustained. It seems for now that the private equity world and financing does a good job in managing these operations. Breitling being a very good example of this, um, supported by the right strategies. Um, I'm afraid that some of the others will either have to be taken up eventually, or they need to become more innovative in their presentations, because there is something structurally wrong with some of the ones that are in perpetual or continuous decline over the last 5 years, which means that, you know, if this continues at a time of slower growth, what happens in the watch industry is that you lose your talented watchmakers. They go to other brands. This is not necessarily the time to be producing your own brand. So the outflow is very big, and the problem with the likes of Panerai, the likes of IWC, even if they seem to be okay for now, and of course JJ Lecoultre, is that they can easily go really south once they begin to lose momentum. And the three of them, IWC is okay for now, but they're not yet getting out of a comfort zone of doing more price increases and generalized cosmetic changes to their look. And that, I think, is a problem that they will have to face. Panerai has a bigger problem because the general market trend now is for watches to, as you said, um, stabilize between the 40 to the 41, possibly even 42 millimeter range. They're no longer 43, 44. They're out of fashion, and now pieces are beginning to look, they're going to be over the next 5 years, be smaller because of the trend.
Yeah.
So Panerai has a big issue because it is the watch that revolutionized the watch industry to become bigger in size.
And in a
Uh,
way, it was the hype watch before any hype watches, right? In the sense that, of course, Daytona opened up the 21st century as the OG hype watch, with waiting lists emerging, with the in-house movements, 4130, etc. But especially with a particular boost it received from celebrities and Hollywood stars, Panerai really changed the watch game in a way to to the point that it pushed Audemars Piguet to make a 48 millimeter watch. Do you remember that Terminator 3
oh yeah,
edition they
oh
made?
yeah, Terminator 3. I even had a friend who bought it, and I
Look,
said to him, "What is this?"
again, again, not to necessarily get stuck on a particular watch, but that was a trend, right? That was an undeniable trend, which was the hype at a certain point. Now we have a hype that, yes, has a certain aspect of sportiness, of dynamism, but also has the heritage of these luxury high horological brands. So we live in a different time where the Patek Philippe Nautilus and Audemars Piguet Royal Oak and the Daytona have been setting the note on these hype trends. And these are traditionally nicely proportioned, classically sized, and in many ways, very sleek and even delicate watches, especially when it comes to the Royal Oak and the Nautilus. So it's not a surprise for me that we lived in an age where Breitling, Panerai, and AP Offshore was dominating the hype, if not necessarily the world of the horological enthusiast. And now we have actually a mainstream who is interested in watches, and their entry points are these high luxury items that have an artisanal origin and that actually have a very classical proportions, right? So it's the winds are certainly blowing in a different direction, and that sets Panerai with a particular task. But again, I want to highlight um, what this report underlines as the key winners of 2022, right? We talked about, of course, the big four: Rolex, PP, AP, RM. We talked about how Breitling has made themselves quite a lot of room with a splash in the top 10. Um, they have also highlighted, since they're devolving and emerging from Kering, Ulysse Nardin and Girard Perregaux, under the leadership of CEO Prunier, have reported sales likely up to 80% in 2020, or around 40% when excluding the impact of inventory buybacks last year. So, of course, having a much smaller um, market share, at least for now, that independence has allowed them to really chart their own strategy. And I think that, again, that is a future development, I think, where we can have these sorts of breakaways, these sorts of reorganizations, perhaps within a larger corporate body, where brands focus on certain niches, certain aspects of their watchmaking that distinguish them, right? Ulysse Nardin's entire Watches and Wonders campaign was about the freak, um, for example, right? Where they can do certain things. What did we say? By not doing more, but instead doing better. What they do best, they can focus on doing better, selling for more expensive, even if it is on a smaller, much more humble scale. And Breitling has excelled in that. UN and GP are following in that path. Of course, Audemars Piguet has been, in a way, on the vanguard of that sort of development, right? Which also is the bulk of the criticism they receive, right? The one watch brand. But that is, again, you might consider it a spin, because with all the negative emotions I have through recent experiences, I also have lots of love for AP. So my spin is always to people who
Yes,
say
yes.
one watch brands. I would say, hey, they focus on what they do best and try to do it better and sell those watches even for more expensive every year. That doesn't make me feel better as a collector, but from an analytical standpoint, that is a signal success by them. They have grown to enormous proportions, I think, in their own way in the last decade. I mean, that's an incredible success story. And I want to highlight something as we are drawing to a close and ask for your opinion, because this is a very complex question and something that they highlight in this report as well. So AP's core of the success is their DTC model, right? Which, of course, people love these sorts of acronyms. Direct to customer. AP has a boutique model where most of their sales occur through boutiques that are either owned by their corporate or operated through close cooperations with their most trustworthy and reliable authorized dealers. So even as they increase their prices, even as they quote unquote premiumize their products, they're also exemplary in deriving the most profit out of that by practically having eliminated a lot of the leaks, a lot of the middlemen in the process. Yet at the very top, we also have the example of Rolex and Patek Philippe, who have no online sales, unlike the success story of Breitling, for example, which is also a way of direct-to-consumer access. They have no global network of boutiques or houses. Rolex has one location in Geneva, which is not necessarily the most commercial point of sales. Patek has three salons between Geneva, London, and Paris. What do you make of that disjunction? On the one hand, increasing success and increasing popularity of direct-to-consumer models by some of the big players and some of the growing players in the industry, like Audemars Piguet and Breitling. And on the other hand, the traditional big players like Rolex and Patek still going their own way by not really dabbling in online sales or operating an entire network of their own boutiques.
The direct sales model can only work for the smaller producers. Rolex, the Rolex model cannot be adopted by everyone, and Rolex cannot adopt a direct to customers model because it's not viable for them. Regardless, I think the industry is trying to, over the next 10 years, become more controlling of its product. They will not necessarily succeed in its entirety, but what they're trying to do is control the secondary market, control a bit the ability to face control the customer, kind of KYC, know your customer way, although that has been proven not to necessarily work out. The COP program of Rolex control a bit the secondary market. Will it make a dent? Yes, but will it structurally change the entirety of the secondary market? Not significantly, but we don't know yet, but it will, impact the
And
secondary market. So they're
can I
trying to control. They're trying to
just
control.
to just to restructure that question a little bit, because I did want you to intone that particular point that Rolex's volume changes the game for them and makes that sort of boutique model quite simply impossible, certainly in long short to midterm. But and I wanted you to clarify that for the audience. But what about Patek? Why do you think they are an oddball in that particular segment where they have, you know, production numbers that are not outrageously different than Audemars Piguet. And Audemars Piguet has laid out a model in terms, I'm not talking about their product line at all, because Patek decided that they don't want to go that way, by all means, but by their model of a global network of corporate-led houses, which have this social space for collectors kind of aspect, members club kind of vibe, an entire network of global boutiques, again, that are either led by the corporate or run by some of their privileged authorized dealers. Whereas Patek doesn't do that. They don't play that game, and they're still successful. What do you think about that conundrum?
Um, over the next 5 years, the entire, not the entire, that Audemars is adopting the boutique model. It seems they seem to be happy controlling that. What is happening is that, again, the watch industry, at least the top tier, top four, want to be more in control of their product. They want to know who is the customer. Patek Philippe is closing down authorized dealerships. They're not expanding. So they want to control that. So they want to go down to more predictable, knowing the sales point more than what they already do. Rolex is closing down also authorized dealerships, but still, because a lot of the authorized dealers are finding it difficult to source product, and that is creating an issue. The other issue that Rolex finds quite difficult is that a lot of their watches are sold in the gray market within a week or 2 days or a month, of the sale. And authorized dealers have been found to do this, and we
Yeah.
discussed it in
But
this program
I'm
very
so
often.
glad that you gave a very illuminating answer, because you are basically saying that Audemars Piguet has gone a certain way in not only identifying and knowing their customer, but also devising ways of accessing them directly. Whereas Rolex and Patek have their own way of going about it, which uh, now involves perhaps shrinking their network of authorized dealers. And that has been the trend that this report shares as well. The number of authorized dealers for Rolex has fallen. The number of Patek has fallen. Now, some might raise the alarm and say, hey, that has been mostly due to the kind of gray market practices and games that you talked about. But actually, and that's why I value your answer so much, that's not the only thing. It is actually part of a continuous and intentional strategy of, once again, we are going back to that slogan, not doing more, but doing better. So shrinking the network of authorized dealers, having better control over how your product is being bought and sold, and in a way increasing the quantity of points of sale, points of access, whereas you're intensifying on one level, perhaps the quality, but more so the exclusivity of your product, where it's not going to be just about everywhere.
And also, Lord, it's about having the product. None of the watchmakers, the watch manufacturers, want to have ADs that have no watches, or two watches which are uninteresting. Even Patek, admittedly does not want to see that.
Mm,
This is not making the authorized dealer happy, because outside, he has Patek Philippe, and then you go inside and he says, I have nothing, or I have these two, but I can sell you jewelry, diamonds, a few other brands, but Patek Philippe, I don't have much. And this has created a lot of unhappiness with authorized dealers. But certainly, the watch manufacturers want to consolidate. The smaller ones will consolidate more. The bigger ones will consolidate, but it will be less observable because of the sheer numbers. Rolex, if they shut down 100 authorized dealers in a year, it's not going to make a dent. But they are frustrated as well with the fact that what will become permanent is the exhibition only display. I mean, that is going to be a permanent feature of Rolex. It's not
mm,
going to be a temporary feature. And I think what you will see over the next 10 years is the price increase going into a territory that becomes far more price unobtainable by the upper middle class. And they will be able to sell watches, but fewer pieces to the same individual. But they want to spread out to more people. So the collector will be less available, but they will be at a higher price point obtainable to the very wealthy, only because they just cannot produce, 3 or 4 million watches as the demand is there in current numbers. So, they cannot just easily turn on the key and produce more. I think what will be the pattern is consolidation, controlling the points of sale, do price increases more than output increases, and make it even more of an unobtainable item of luxury, that instead of having 10 watches, you get all the GMTs.
mm.
You will get one GMT and that's it. You know.
I think I have a great segue slash cliffhanger to put the ellipses on our conversation. The When I was in the Tiffany and Co. Patek Philippe boutique last December in New York, they had all the watches. The cases were full, but it was even more of a tease than the Rolex exhibition only presentation model, because it was like, oh no, sir, you can't actually touch them. So I'm raising this point in two ways. One, like you said, people like exclusivity, people like scarcity when they are chasing after a luxury product, but they also want to be able to have that aspect of what the Germans call Vorfreude, right? You have to have the excitement and joy in this prefigured fashion, in this expectation, because if you are completely removed, physically removed from not only the experience, but even the sight of the product, you can't desire it in the same way. It just doesn't happen. So both Rolex and Patek are working very strategically and very intentionally with this aspect of scarcity. How can we make our products more and more exclusive, but without limiting at least the kind of access to it that would inflame the desire? And the reason I said, I will, of course, let you make your last points. The reason I leave it there is, and the reason I said be nice when we were talking about Patek, because I want us to take an entire hour where we can rage on it in relation to the Bloomberg interview with Thierry Stern, and we can
Ah,
take that apart in some ways in our
yes.
next meeting in these conversations. But I want you to talk about that um, ambivalent and intentional play on scarcity that Rolex and Patek are doing, that delicate dance, and we can use that as your concluding remarks as well. Thank you.
Yeah, I think you said it very well. The I think the strategy for Rolex, like with Tudor, is Tudor being at a lower price range. Um, the strategy for Rolex is to make every segment of the line very unobtainable, not ultra unobtainable, but very unobtainable. And I think they're doing an excellent job towards that. Um, you look at the recent iterations, um, people expected that, oh, okay, I'll go and get a platinum Daytona just because it was available in 2013. It will not be for those who have 10 watches, right? It will be a very, very, very difficult watch to get.
Mhm.
But then you say, okay, I cannot get that watch since I have the steel Daytona. I will go for, the Yachtmaster titanium. Well, yes, it will be more obtainable, but still difficult to obtain. What they're doing is clearly propping up every segment of the line, the entire line of watches, very successfully. Um, Patek, on the other hand, continues to produce, interesting watches, but the market is no longer the West. People are under the false impression that Patek cares much about the West, meaning Europe, the US. The largest market for Patek is Asia, and China and Hong Kong are by far the largest. Whatever the numbers tell you is very different, but that is really for them the future.
And actually,
Um,
by the way, the numbers don't tell much of a different story either. If it weren't for the pandemic, and even during the pandemic, if it weren't for such extended closures for the Chinese markets for luxury watches, China was on its way to take over the US. So this is just a suspended equilibrium for now, and eventually the Asian
Very well
market
said.
will have the bigger say. That doesn't, we can take that apart a little bit in future segments.
Yeah, yeah,
Because just because the US market is not priority doesn't mean they don't pay any attention to it at all. And if they are not, that could be a detriment for them still, because that's still a huge market for luxury brands and luxury watches to compete. But Yes, you're
It does.
absolutely
It
right.
does.
The
And
Chinese market
and
is on its way to take over the American, and
and
that's inevitable.
and there is another market which doesn't figure in a lot of these data points prominently, but there is a reason for that. It's the Indian market.
Mm,
The Indian market is a huge, becoming a huge watch market, but it's not reflected because points of sale in India is not the right point. It's not the right way of revealing the source. Indians buy a lot of their watches from the immediate region, predominantly the Gulf, Arab states, Dubai, and then when they travel. And if you actually do a study on who buys what from where, a lot of these watches that we think are bought by Westerners in London, Paris, and other points of sale are actually bought by Asians. So the Asian influence and purchasing power is far more
mm,
than what we think. We think traditionally
mm.
it's Europe, the US being big markets, but it's not as big as we think. And the market is clearly for the next 30 years for the Swiss watch industry, and I would include also
Mm.
Lange, although Lange has a bigger challenge that needs to manage. We can talk about it
I
separately, but
Yeah, I
Asia is
think
the one.
we can certainly have interesting segments on Lange and Panerai, but again, just to leave our audience with that little cliffhanger, thank you, the original OC, $2. Kudos for insights and analysis of this report. My thanks to the professor. I couldn't have done it on my own. Um, I want us to, in our next segment, whenever you find the time, no rush, because for us, again, uh, time is always ticking, but we have conversations that are, again, not to pat myself on the back too much, but that are insightful, that are profound, and that are to a certain extent timeless. But I would like us next time to talk about the April 5th, I think, dated interview that
Ah,
Thierry
yes, yes,
Stern
yes,
had with
yes.
Bloomberg, and we can talk about Patek Philippe as a brand. We can talk about what the recent developments in relation to Patek Philippe and their direction and their appeal in certain markets speaks to other aspects of the Swiss horological industry. And we can also let off some of our steam, some of our pent up aggression towards Patek Philippe in that special segment where we would once again have 1 to 1.5 hour conversation. I want us to conclude here because I want this to again be a segment that people can return to later so they can learn from your insights, your analysis. And I want to thank you once again for setting aside your valuable time for my humble channel.
No, thank you for having me.
Thank you, everybody. I had the privilege and extreme pleasure of hosting the professor again on a special segment where we had an update thanks to his insights on the Swiss market for luxury watches. Well, it's a global market, really, but the global market for Swiss luxury watches, let's put it that way, where we poured over the details of the sixth annual Swiss Watcher report that Morgan Stanley produced in collaboration with Lux Consult. It was a pleasure to be with you. Thank you for your kind words. Thank you for your encouragement. Thank you for your questions. In the future, feel free to, if you have specific questions towards any aspect of the conversation, feel free to send them in real time. Maybe on another occasion, if we can structure ourselves slightly better, and it's my fault for the most part, we can even have a dedicated question and answer part. I'm sure the professor is very familiar with that format where you have all sorts of people in the audience asking questions after an academic talk. So we will get to that on the next one. Again, thank you for the kind words. Thank you for your questions and insights. And thank you, Professor, for your analysis. Hit the like button on the way out. Take care, people.
Yes, please. Thank you.